All right. Hope everybody is having a good night. It is Thursday, the 4th of May. We took some banger trades today with the team. I am very happy with how we performed. And let's get right into our charting session. So, let me pull this up here. So, going into the day, I did have a bearish bias. So, first, that's the first thing I want to talk about. Why is my bias bearish, or my bias bearish going into the day? So the first thing, right, is we always zoom out, right? Going into the day, we want to see how price action has been treating us the last couple of days, what has happened. So let me pull ES to the main screen here. We can see ES took that previous high on Monday, and we've been selling off pretty strong ever since, right? We sold off took that initial low. We broke through that, pulled back to discount, right? If I was going to draw on that high to the low, we pull back to discount, and then we end up selling off back to the lows, right? So the draw on liquidity once we hit that initial high was then this previous low. And then I was expecting the exact same thing once we broke below this, we get that initial retracement and then selling back off to that initial sell side level here. So when I see this, we have this fair value gap here on a 1 hour. We get a break of the sell side level. We bounce from the lows. I do want to see if we hit discount or not. I don't think we did. So we never ended up actually hitting that discount retracement. But we did have this inverse fair value gap here. Or I'm not sure actually where this, I think it was on the 1 hour. Maybe we didn't. I'm not sure what this is. Maybe this is a daily fair value gap I think I have drawn in. Yeah, this is a daily fair value gap. So let me take this off real quick so I don't need this anymore. So going into the day, we have a sell-off at the open, or this was in the overnight session on Wednesday. We open up overnight session, have a little bit of a push, retracing, right? So once we see this big sell-off, and I can see that we swept that big external high in the recent coming days, and then I see a big sell-off back into the range after sweeping that high, my bias is then bearish, and I think whatever those previous lows are then become the draw, right? So the draw now becomes first this initial low and then this initial low, right? So zooming in here, going to a 15-minute, looking at the open, right? First thing I want to do is I want to replay going into the open because I did end up taking a trade pre-market. So I ended up taking a trade pre-market, shorting, targeting this sell side level, right? Because I'm confident that the draw on liquidity is most likely lower. And what I'm even more confident in is like we were talking about today in the live session with everybody, is this to me is now low resistance liquidity. So what does that mean when I say this is going to be a low resistance liquidity run? Right when we come down to break this level, I would not look for a long position like we normally would. And the reason why is because since these two lows are so close to each other, this now becomes low resistance, which means if we're going to take one of them, we're most likely going to take the other one as well. So I know the draw on liquidity is this external level, so it's going to be this internal level as well. So we're most likely, if we sell off, we're going to take both those levels out. So zooming in here, going to the open, looking at the time, let me take this stuff off so we can get a clear look at this. And I want to see if I can find some sort of entry to target those lows, right? To target whatever the draw is. And to me, the draw is that previous low, right? We have a big move up, starting to sell back off, just now downtrend. If we look at a time frame, there's nothing really over here that's going to keep us from bouncing. So if I want to get some kind of entry, I look for a model that we like to trade on a smaller time frame, right? Building confidence in whatever the draw on liquidity is. So the first thing I want to look at is, okay, is there any PD arrays that I can sort of, draw in to give me confluence or conviction to somehow take a short position here? Well, I zoom out. Okay, so first thing is if I'm bearish, right, I see that we have, a 15-minute order block that I see. So we have a 15-minute order block. I just draw it from the bottom of that candle. If I go to a 5-minute, I'm like, okay, we're also kind of in a fair value gap, right? We have this 5-minute fair value gap. And we also just swept that recent high right here, right? So we kind of have a bunch of different confluence lining up here. And the biggest thing that made me get in this trade is we then formed SMT at the highs. So we have a sweep of that recent high. We have not a lot of follow through this high. And then we get an SMT. So I then look at NQ at the time, right? If we look at NQ at the time, we can see NQ also is forming SMT. Notice we did not take those equal highs here, but ES did. So we're not only forming SMT on the 1 minute from these highs, but on a bigger time frame, ES actually took those highs, and NQ never took those highs. So we're actually forming another bearish SMT at the highs, right? So that's even giving me more confidence that we're going to most likely sell off. And this is going to be a cheap entry if I could get some sort of short entry. So I decide to trade NQ. And the reason I decided to trade NQ is because NQ didn't take that recent high, right? That's telling me it's a little bit more weaker, right? And ES was strong enough to come through, break that high. NQ was not strong enough. And the draw on liquidity for NQ looked a little bit more clearer to me because we had more selling pressure and we were closer to taking that level than ES was. So once I saw that SMT, I don't need a break of structure, right? Because turtle soup entry, if we're trading off an SMT and we're trading towards whatever the draw on liquidity is, I don't need to see a break of structure. All I need is good risk. Now, a lot of the times you don't even need to trade off of a fair value gap. You can trade, if I'm looking at ES here and I can see NQ just swept that previous high right here, right? And then we immediately sell back off. I'm like, okay, I instantly see a SMT. So I can trade whenever that next candle gets broken, that could be my entry because you get the best risk to reward possible, right? Because all you do is you could either set a super tight stop at that previous high or whatever that, the high is from the SMT. And then you end up getting, a beautiful risk to reward instead of waiting for another break of structure, which would be here, and then waiting for a pullback, which then gives you, a little bit, less risk than it would be if you just took it off of, your SMT. And that's what we've been building confidence with over the last month or so, is building confidence with taking scalps, fast entries, with when you have confidence on whatever the draw on liquidity is, you have confidence in your conviction, confidence when whatever PD arrays you're taking. And this was, for me, a very confident play that I took. Now, unfortunately, I couldn't alert this. This was pre-market. This was at 9. So I wasn't live streaming at the time. I ended up hopping on the live and then showing you guys what trade I was actually in. But so that was the first trade I took in the day. I looked at NQ, waited for a pullback into that fair value gap, got a nice entry long or short, put my stop at that previous wick high, and then I rode it all the way down to that recent sell side. Now, I could have let it run to that external sell side, and I should have probably left a runner, but since it was pre-market, I was, a little bit cautious to see how the market would open. And so this was, a good enough trade for me to take, right? A 6.5, risk to reward ratio. That's, a beautiful, beautiful trade to start the day. So I took that trade on the small account, made around $500 on that. Again, most of the time I don't really trade the main account until market open, but I've been gaining a lot more confidence recently. So I'm thinking about potentially upping my size in the coming month. We'll see what happens. So then, going into the rest of the day, right, I'm confident on the draw on liquidity. We can see NQ or ES and NQ ended up selling off in the morning after we formed those SMTs. So now what I'm watching for is I want to see how ES is going to react after that level's taken, right? After we get those external levels, sell side taken, are we going to, continue down? Are we going to, get a bounce in? Are we going to get bought up? What's going to happen? So going into a 1 hour, but looking back at where we are, we have now swept that internal level, and we've swept that external sell side. So once that happens, I'm not touching shorts, right? Once buy side or sell side's breaking, if buy side's broken, I don't touch longs. If sell side's broken, I don't touch shorts until we get more structure, right? And we get some sort of idea of whatever the next draw on liquidity is. So that's what happens here. The second trade we ended up taking, I think this was it right here. We ended up taking a loss on this second trade. And this was the first loss of the month. This was the only loss I've taken so far this week. And again, this trade for me, looking back at it, I think was just a little bit premature. And the reason is because I was confident in this being a low resistance liquidity run. And I ended up breaking my bias because of this setup, right? Now, I told you guys going into the day that if we were going to break sell side, we're most likely going to continue down to break that external sell side. So I ended up breaking my rules or breaking my bias here and trying to take a long before that external level was taken, right? But I was confident that that's going to be mostly low resistance liquidity run. But I was a little bit eager to get into a trade. We were, holding the fair value gap, and honestly, it was not bad risk at all. It was honestly not a terrible trade to take. I had good risk. We ended up coming down. I got in once we continued to kind of hold here. I got in longs right here once we formed an SMT at the low right here. I got in longs targeting that previous high and then the highs up here. And then I ended up, we got bought up really nicely and then an instant just rejection and then sold off right back to those lows. I ended up getting stopped out there. So a small little loss there. I was still up on the day by then, gave back some of my profits though. But again, going in, the lesson that we can learn from this loss is, right, I was confident in what I thought was going to happen, right? I was too eager to maybe put on a trade, too eager to, get something on the table. And a little bit, you got to be more relaxed, trust your instinct, whatever it is, right? And for me, I was pretty confident that this was going to be a low resistance liquidity run. So it's always best to be patient for both of those levels to get swept. So after that happens, after we get that external level swept, I end up getting a long entry. So looking over at NQ here, NQ has now swept that level here. And now something that I did not draw in, but something that I'm going to be paying attention to in the coming days is this. If we look at a 1 hour here now, we're now forming a SMT. Actually, I'm going to just go look at on the 4 hour. We're now forming SMT here at the lows. If I look at the 4 hour on NQ, look how far we are away from that sell side level that we took on ES, right? So we're now forming SMT here. So ES has broken that low, made a lower low. NQ is now making a higher low. This is telling me that we could see more upside in the future now. Going into tomorrow and next week, we could see a stronger bounce. And we'll go into, later in this session, we'll go into what I think the next draw on liquidity is going into the next, couple days. But first, I do want to go over the plays that we took. So this was, our big play that we took today on NQ. The reason we took this is, again, we have everything we kind of want now. Number one, looking at the lows. Let me take this old stuff off because we never formed yet. Zoom in here. So the first thing that I see is that we form, I think we formed, maybe we didn't. Okay, we didn't form SMT at the lows quite yet. But I was looking to see if we were going to get a break of structure, right? Because we now have everything we want. ES has swept that external low. NQ has swept the low. I want to see if we can get now a break of structure. So after we sweep that external, we then sweep an internal level, looking at a higher time frame like a 2 minute. We then sweep this internal level. So now I want to see a high put in and a break of that high with decent displacement. And that's what I get here, right? So we can see the volume starting to die off. We can't really seem to, head lower, not too strong. And then we get a nice buying pressure coming in right here on NQ and ES. And we end up forming a breaker block here. So this would be our market structure shift that we end up getting. And we get a nice 2 minute breaker block that we end up pulling over here, right? That's what we want to see. We get a sharp move up, sharp move down, and then we pull it over, right? Whatever that market structure shift level is, this is now becomes our breaker block. So once I see break of structure, we get a nice break of structure on ES, right? When I say I want displacement for market structure shift, this is what I mean. Look at ES. Massive candle to the upside. Massive, massive candle to the upside. And then we get a nice fair value gap. And this would be your entry in this fair value gap. Then we go to whatever the next draw on liquidity is. Once we get that market structure shift and we continue to hold buy side, that market, the draw first becomes this. This is now low-hanging fruit. Right? Whatever that initial high is after that market structure shift, that is low-hanging fruit. Should be at least some sort of percentage of your contracts off once you take that high out. And then the next draw would be that previous high, which would be here in this case. So looking at NQ, going to the 1 minute, I wait for a pullback. Now, I should have waited for a pullback into the breaker block. I did. I was a little bit too risky on this trade, and not risky as in position size risky, but I did not position myself average-wise, the average of my entry price, for the specific trade. This chart could have came down a lot lower and still be valid for this long, but I ended up entering right when we came into this 1 minute fair value gap. I entered, right when we touched it, and I ended up, getting like almost a tick off from my stop loss, because again, I set it a little bit too tight. My stop should be here. My stop should be here. I just didn't want to give it that much room. And in the live, when we were actually in this trade, I said, we can always enter back into the position, right? We can always get back in. If we get stopped out and then we see it go in our favor, and then we can recognize, say, okay, we probably got stopped out here. But again, this is still not bad. 2.5 risk to reward is not bad at all. But the thing is I'm planning to already take off half of my position when we take out those highs here, right? So I'm already planning to take off half my position. So if I was to do that and take off half my position here, this trade then becomes less than 1 RR if I was to put my stop right here, right? Which is not, that's not worth it to me. It's not worth it at all. So what I do is I can always get back in. I have a tight stop loss on this trade, and I know that I can always get back in this trade if I get stopped. So what that then does is when I do hit my 50% part and I do take off half my position, I'm making 1.47R, which gives me, some sort of leverage. If I was to take a loss, I would still be making more money if I made, the win than I would be losing a loss. And then this just gives me, a better position, right? And then I let it run. We ended up getting an absolute monster move. I took half my position off at the high. Afterwards, we just shot up. I ended up selling. I didn't exactly hit it at that take profit right here, but one thing, so then this sets it up for that next trade that I took after the live. Notice how we form triple equal highs now on NQ. What have we talked about before on triple equal highs, right? What's our A++ model that we look for? Is triple equal highs, right? We get 1, 2, 3 equal highs here, and then a big sell-off afterwards. This is telling me that this now is going to get hunted. These highs are going to get hunted. So we look for our biggest potential setup that we could possibly look for. So once we get this buy, I sold somewhere like probably around here at like 1,300. I'm up like 5,000 at this point on the day. And I could have ended it here. I probably should have, to be honest. But, price action was just playing out so well that I did want to see if I could get another trade. So looking at now the 5 minute, right, zooming out, after we took that trade, I want to reevaluate, all right, because then we ended up getting this big sell-off here. And I do want to talk about I think there was a short setup, maybe, I'm not sure, on ES. I want to see if there was an SMT here. I don't remember if there was. I wasn't paying attention. That recent high on ES was that. No, I don't like that at all. Okay, never mind. So NQ ends up selling off, and this is the biggest thing, right? Somebody tell me in the chat right now, what is the things that we look for an A++ setup or whatever it is, right? Triple equal highs. The next thing is an SMT on a bigger time frame, right? So look at the 5 minute. ES ends up selling all the way off to take liquidity from that low, and we end up forming an SMT on a 5 minute time frame. So we draw an SMT, looking at NQ 5 minute. We're now pulling back into that breaker block that we had, remember? So we have SMT at the lows. We have 3 equal highs above us. Now I want to see us, show some sort of displacement back up. So then I know that we're ready to go back bullish, right? Because we just sold off all the way from the highs. Now we're forming SMT at the lows. So I want to see us get bought up first before entering long. So I see ES automatically starts getting big buying pressure from the lows. And I look at NQ, because NQ I think is more strong, right? NQ has 3 equal highs. That's why I'm trading it. I'm very, very confident that this is now becoming the draw on liquidity. So we come back down, continue to hold that past 2 minute breaker block. And right when I see a break and I see buying pressure come in, right, I don't even care to see a fair value gap. Now, I did see a fair value gap, and that's where I did enter. But I also, on my small account, entered the same trade, and I entered it, like right here, right when I saw that SMT form and I saw a buying pressure and I saw a break of that previous wick, I enter long, right? Because that's what's going to give me the best risk to reward. And if you're confident on the draw liquidity and you have an SMT, that is the only time that I'll allow for you to, enter prematurely, because it'll most of the time give you the best risk to reward. So zooming into a 1 minute now, I did wait for that pullback. We got a break. We have a 1 minute breaker block now here. We got a 1 minute fair value gap. I enter in off that 1 minute fair value gap. Gave myself a little bit of room here. Put my stop down, and then we got a nice big buying pressure. Pulled back to that 1 minute breaker block again, continuing to hold as support, and then we create a breakaway gap. So what is a breakaway gap? I don't think we've gone over it before, but a breakaway gap is a fair value gap that doesn't get touched until liquidity is then taken, right? So this then becomes a breakaway gap on a 5 minute time frame, right? Notice how we never ended up retracing back into this and then heading higher. We swept those highs first and then sold back off to, rebalance in this price range, right? Because as fair value gaps, we know fair value gaps is where there's no liquidity, right? There is no liquidity in a fair value gap. That's why it's an imbalance. So we rebalance to these price areas. So the next trade I took, right? This was a beautiful trade that I took after the lesson. And then I took one more trade. It was on ES, and it was right after we swept these highs. So looking at ES and NQ. NQ just swept these equal highs. Now what? I'm like, okay, are we going to head higher? Are we going to go back down? I want to see how the market now reacts. Well, if I look at ES, a bigger time frame, like a 5 minute, I want to see if maybe we're forming a bearish SMT on a bigger time frame. Well, looking at this, I can see that this previous high that we already broke through on NQ has just been taken. We have just had this massive push and now forming an SMT on a 5 minute, right? Looking at ES, this was that previous high. Now forming SMT. ES never ended up taking that high out. We're forming a lower high on ES. We're forming a higher high on NQ. So then I zoom in, right? I go to the 1 minute. Now I want to see a 1 minute SMT, right? And that's exactly what I get. So we have a sweep of liquidity on ES and NQ. We have SMTs now formed at the highs. Now you can enter pretty much wherever after this, right? Now I wait to see a fair value gap, and I ended up selling pretty early on this trade. But I waited for a pullback into that fair value gap when we have that SMT, entered a short position, and it ended up selling it at that breakaway gap, right? If we look at that 5 minute, I know price is now going to rebalance to that fair value gap, right? Because that's a breakaway gap. Once liquidity is taken, we most of the time go back to that area. So that was my target, was that fair value gap. Now I could have let this run, to somewhere, maybe a little bit, but honestly, that's all I really need. It's whatever I'm confident in. That's the thing. You cannot be greedy. If I'm only confident for us to sell off enough to get to this fair value gap, that's okay. That's okay. This is still a 3.6 to risk reward ratio. That is a fine trade, right? I do not need to catch this entire move. Just like I did not need to catch this entire move on NQ today, but I did. Because I positioned myself accordingly and allowed me to actually take advantage of this move because I scaled out my contracts. Right? I scaled out half and then I let the rest go. But if I'm not confident in that, then I don't have to let that run, right? Don't let greed take control of your analysis of the actual trade itself. The trade itself is what's making you money, right? If I'm not confident in us selling off this much, then there's no reason for me to let my contracts go that much, right? Now, I do think that you should let yourself build that confidence to let your runners go. I remember me and somebody in the chat recently were talking about how, they've been struggling to, let their runners go after taking profits because, they don't want to give that money back, right? But again, today is a perfect example. We have gotten stopped out many times from the lives after we get first off, right? I'm sure many of you can attest. When we live trade, there has been many times where we take 50% off and then the rest gets stopped out. Now, we're still making money, right? It's not a bad thing. But the days where we end up getting those runners are the paydays, right? Just like today. The days where we allow ourselves to follow and make good habits, you will be rewarded like this, right? We take half off. We're still making money. As long as your half off is more than 1.5 or at least 1.5, then you're still profitable even if you take half off or not. And not your full position. Even if you take half off, not your full position. So the days like this where you let your contracts run, you will be rewarded for them. That's why I'm up 6K on the day. Normally, most of my green days are 1K, 2K, whatever it is. But the days where we end up getting action like this, and I do let my runners go, I'm gonna get paid for it, right? And you have to have the discipline, and that's just the way I like to do it, right? Now, some people don't like doing that. They're more confident in just taking their full position off at low hanging fruit, with like the most confident, right? This would be considered low hanging fruit for the draw on liquidity if we were to bounce back, which is fine. That is perfectly fine. You can be an insanely profitable trader just taking off full positions at whatever that is. But in my case, I like leaving runners because it gives me the opportunities to milk a move, especially if I'm confident on whatever the draw on liquidity is. So that was all the trades that I ended up taking today. I went for, how many trades did I take? I took 5 trades. Did I actually take 5 trades today? Took 1 the pre-market, 2, I took a loss, 3, 4, 5. I took 5 trades today. So I went 4 for 5 today. It was an overall great day. I'm up around 6K on the day. So let's go over what we're going to be looking at going into tomorrow. So let me kind of take off all these drawings here, clear up the charts just a little bit. Delete all this kind of stuff here now that we've talked about it. We'll talk about going into tomorrow and next week as well, because now that we've swept that external low, it's going to be interesting to see if we have more downside to go or if we want to bounce from now, especially now that we are forming, that bigger SMT. So first thing I want to do, let's take a look at ES first. 4-hour time frame. Again, just swept that low. Well, I'm actually just going to draw this in because we are forming SMT now at the lows. So, looking at a daily, what do you see? In my opinion, what I see is have not yet swept that external buy side on a daily. Now, we have swept that internal and then sold back off to sell side. So, if we're looking at an overall structure of the chart right now, we're still bullish, in my opinion. We're still bullish, and we have not swept that external level yet. So I still think the draw on liquidity is that buy side level. But I also want to draw in, right? If I draw in this, discounts all the way back here. So we could see more downside. But let's see at, different biases that we could look at here. Number one, first thing, we're in a fair value gap. Let me take all this old shit off here. We're in a daily fair value gap, as well as I'm pretty sure we're in a weekly. Yep, we're in this weekly fair value gap as well. We just swept that low on NQ. Gonna pull up ES or NQ here now so we can see it both on the daily. We're forming SMT on the daily with ES and NQ. NQ also swept that high out though, right? So now we could potentially see lower on NQ, and that might sell ES off, right? Because NQ is looking a little bit more bearish now since we swept that high. We've now swept that external high here as well. We could see more lower back to that sell side. To me, that does look like the draw, and that could bring ES back down to then go to that 50% retracement level, which is also where we have a bunch of past weekly opening gaps. So going into tomorrow, I'm going to be more focused on longs. And the reason I'm going to be more long biased now is because we have now swept that external level on ES, and we've now swept that internal level. So in my opinion, the draw on liquidity is now this high. This is now the draw on liquidity, in my opinion. For ES, We've swept that external low. We've swept that internal low. We're getting a bounce from this past, we're on a daily fair value gap. We're getting a bounce. This, to me, now becomes the draw on liquidity where we're most likely headed towards next. So what I'm interested to see is if we can get some sort of setup going into this high here, because we're confident that the draw is going to be high now. And then once that high is then swept, I would want to see if we get some sort of short setup back to the downside. Because we do have a 1 hour fair value gap here. We'll see if we continue to reject this level. I would like to see if we can catch a long trade to target that level. And then once we sweep that high, we'll see if there is a short setup targeting back down near sell side. Looking at NQ, do want to look at bigger time frame first. We are in a big daily fair value gap still, so we still have some room to bounce if we do want to. Again, we're forming that big SMT with ES on the 1 hour. We've swept that level here. Now, in my opinion, I think at least the draw on liquidity is going to be this high first. Now, I would like to see us come back to this high at least first. This is low-hanging fruit. This is more higher. But since ES swept that external, I'm more confident with the bounce on ES and the draw on ES being this initial high than I am on NQ being this initial high. But again, it all comes down to, what has more strength at the time. And we'll see what happens going into tomorrow and the rest of the week. Does anybody have any questions? Do the charts lag on your end as well, Justin, or is it just the stream? No, charts don't lag on, man. You gotta make sure that you have CME data or market data. What's your position size? I recently upped it a little bit. I'm trading around 6 minis of NQ and around 8 minis of ES. What do you do with your profits? Nothing. Not really anything, to be honest. Reinvest it or just save it. I don't flex like a lot of other traders. To me, the value in what I do, like me teaching at it's hard for people to actually believe me in what I say, and I don't really care if somebody believes me or not, but I really do just enjoy teaching and enjoy doing what I do with you guys. So all the money I make from trading is just goes to supporting me and my family. How much do you save for taxes? I save probably around 50% just to make sure everything's covered. Well, I mean, I don't spend a lot of money, so it's not like I don't put money in another account for taxes. I probably should, but I don't spend enough money anyway to worry about having to pay taxes. All right, I'm gonna end the recording now so we can do more questions, and we'll end it here. So thank you guys for watching. If you are watching on YouTube, let me know what you think. If you have any questions, leave them in the comments below, and keep on the lookout for more content in the future. Enjoy the rest of your day, guys.